data connection re-established.
All right, so let's resume from where we left off. We were talking about charts, right? What was the first aspect of a chart? What type of chart are we talking about right now? Time series data chart, okay? So always be particular about these things, because normally what happens is, if you're not learning in a rigorous way, one of the problems with a lot of the material that is available on the web and all that, the reason I tell you only to go to certified sites is they are not very particular about covering the whole domain. So when you're looking at charts, you should be aware that this chart is it's a time series data chart. So which means that tells you immediately that there are other types of charts which are cross-sectional data charts. So it's always important to have that perspective. Okay. So what was the first thing we looked at with respect to charts? Almost at the end. Does anyone remember what was the first thing we looked at? First aspect? Data range, right? So the first aspect is the data range. Okay, we'll just quickly go through the different aspects of the chart. Charts are actually above in the planning. Right. So
data connection re-established.
Right. So the first thing that we were looking at is the data range. Okay, the start date to end date. So that's the first thing you have to be aware of. The second is also that sometimes people miss out on this. It's because it's kind of obvious. And in this case, when I write markets, actually I should write. When I write market, I should actually write markets, because remember, how did we define a time series data chart? How did we define time series data, the nature of time series data? Vaishali, why don't you sit on the first bench? There's space here. You sit between Bharat and nothing, so that the two buddies can't sit together. So you separate Bharat and Saloni. Okay. All right. So okay. So data range is start date to end date. The second aspect is market, but remember, so I'm actually changing my writing a little bit. Instead of writing market, I'm now writing markets. Why am I doing this? Remember, what was the definition of time series data? Does anyone remember? Use the mic. Yeah. Use the mic. Yeah.
To plot at least one variable.
Yeah.
And there should be two observations recorded.
Yeah, at least. Again, you're missing those words, okay? So, at least two. So, at least one means you could have 10 variables as well. Okay, so that's why it's important to say, and 10 variables in this case means, in this particular discussion, the micro aspect of this, that is, it could mean 10 markets. Okay, so like I was saying here, that here I've plotted Euro USD, but I should also start comparing this to other markets. I could compare this to, let's say, any other market. Most common market for comparison would be which currency is this? Swiss franc. Okay, these are all right. There you can see the dollar Swiss versus the euro. Okay, so this will not make sense because of the peculiar. Because in the dollar Swiss, what is the base currency? In dollar Swiss, what is the base currency? Dollar Swiss and dollar. In dollar Swiss, it's dollar, right? And in the case of the euro dollar FX, euro is the base currency. Okay, so that's why it looks funny, because the euro is up 0.6 and this is down 1.5, because the system doesn't understand all that. Okay, the system just plots the variable, okay, blindly. This is what computers do, right? That's why we say garbage in, garbage out, because the computer doesn't really have the sense of a human being. Okay, so that's why I said that the correct definition here should be, for the second aspect of a chart, the correct word should be markets. Okay, market in bracket S, so markets. So this is basically acknowledging the fact that you could be plotting multiple markets or multiple variables. Okay, you can have as many as you want and it will still be time series data. Okay, so we are almost there, so we might as well pause this here. Now you can see that whoever comes now. Alright, so we go back to the aspects of a chart. Alright, so second aspect is market or variable being plotted. Okay, these are all the aspects of a chart. that you should note. As soon as you see a chart, you should start looking for all these aspects, and you should understand for yourself what are these, what are the values, like what market is being plotted. Okay, if it's euro, then it's euro dollar FX. Also remember always, I might have told you this before, whenever you're plotting you're referring to the euro dollar, we can remove this reference now, actually. Whenever you're referring to the euro dollar, always use, when you're referring to the euro dollar exchange rate, okay, always use the expression euro dollar FX, okay, because if you just say euro dollar, there are some interest rate contracts. There's actually a type of deposit which you probably haven't learned. Have you learned about euro dollar deposits? Euro currency markets? Okay. So there are certain types of markets where you have euro currency markets, okay, euro markets. So therefore, if you just say euro dollars, you might confuse people because they may not be sure as to whether you're referring to euro dollar deposits. And then there's also a very famous and very actively traded euro dollar interest rate futures contract on the CME. Okay, very actively traded futures contract. So there could be all kinds of confusion. So to avoid that confusion, therefore, whenever you're referring to the euro dollar exchange rate, you should always use the expression euro dollar FX. This so even and anything related to the euro, even if you're talking about the euro sterling exchange rate, that's also an exchange rate, that's pretty active right now. Okay, if you look at euro sterling, it's very active right now because of why is euro sterling active, do you think? What could be a fundamental reason? Now we are talking, you have some idea of fundamentals? Yes? You have some idea about fundamentals? Okay. So for what fundamental reason might euro dollar be very active right now? You can see how sharply it's moving. Okay. Can anyone think of this? Very obvious reason why the euro dollar exchange rate is moving around quite rapidly. Yeah, you won't get attendance, but it's your choice. You won't attend. Okay. Anybody has any idea? Nobody? For what fundamental reason might euro sterling, sorry, I don't know what I was saying. Was I saying euro dollar?
Yes, sir.
Okay, sorry. What I meant is euro sterling. I'm very sorry. Okay, because I'm calling up the euro sterling exchange rate. You see how sharply it started to move of late, especially. Okay, why do you think this is happening? Any idea why the the euro sterling exchange rate is very volatile right now? Any idea? Yes? Brexit, okay. So Brexit, and all the uncertainty around Brexit, now you have a new British Prime Minister who is likely to push for a new no-deal Brexit, okay, and that is seen by the market as, at least in the short term, it's negative for the UK. So they're selling the sterling and buying euros, okay. So in euro sterling, what is the base currency? Euros. Okay, so this is the other part that we'll come to when we look at charts. So then obviously immediately when I show you this chart, you notice the first thing you notice is the data range. Okay, this is from about September 2012, and you notice that which market is being plotted. This is the euro sterling. So even when you're talking about euro sterling, the exchange rate, you should say euro sterling FX, because you could also be referring to euro sterling deposits. That is, euro market deposits in sterling, okay, would be called euro sterling deposits, okay. So therefore, to avoid confusion with that, so you should just be aware that even if you don't understand euro deposit markets, you should be aware that there is such a thing called a euro deposit market. So therefore, whenever you're talking about any exchange rate connected to the euro sterling, okay, euro dollar, euro Aussie, okay, all these things, therefore you should always add the suffix FX. Is everyone clear? You don't seem very convinced, Khushbu. I'm just saying, suppose there are two students called Khushbu, okay. So then if there is Khushbu Sharma and then Khushbu Saxena, then if I just say Khushbu, then people are not clear who I'm referring to, right? So therefore I have to say Khushbu Sharma. So similarly, because you could have, when you just say euro sterling, you could be referring to the euro sterling deposit market. Okay, so euro market deposits in sterling are referred to as euro sterling deposits. So because you could have that confusion, therefore whenever you're referring to any exchange rate connected to the euro, you should develop this practice of always adding the suffix FX. That tells the person who's listening to you that you are referring to the euro sterling exchange rate. There is no chance that you are referring to euro sterling deposits. Or if you say euro dollar, there's no chance. When you say euro dollar FX, there's no chance that you're referring to the euro dollar futures contract on the CME. Okay, is that simple as that, right? This is clear to everyone? Okay, just something you have to remember. Okay, so that's the second part. And what's the third? Okay, it's in the same window. Okay, all right. So data range, markets, plot type. We had basically, I think, started on plot type the other day. All right, the plot type. Now there are many types of plots possible, and we start with the most simple plot type possible. We've already shown you this before, but we'll just run through it once again. That is the line chart. Okay, so you just plot one dot, and usually when you take the line chart, you take the closing value for the period. Okay, so we actually going ahead of the next one, which is the granularity. Okay, but so line chart, basically just understand this a little superficially at this point of time. So the plot type is, in this case, one simple the simplest plot type which you guys are all aware of is the line chart. Is this clear? Okay, so this chart is being plotted for any period. So in this case, the period is daily, which means when you see this kind of a chart, you notice the period is day. Okay, one day, which means every day we look at the closing value of Euro Sterling FX, okay, and we plot it. Okay, we put a dot. Okay, and every day we do this, and then we join all the dots, and that's how you get this line. Is this clear? Okay, the simplest kind of plot, where you capture the minimum information, which is one value. You could technically plot a line chart even for high or the low or the close, or you could also plot it for high or low or open. Okay, but normally when we plot line charts, we plot the closing value. Okay, so if you look at a system, right? If you're looking at a system, and the question, it is pretty. I mean, it's basically guaranteed that this system has been programmed to, although it doesn't tell you anything, but when you're reading this, what are you reading actually here? This 8511, can you guys see that? Yes, sir. 8511, the cursor value, right on top here. This 85 over here, that 8511, whatever we saw, 8382 right now. That stuff is the closing, but the system doesn't really tell you this. But by default, you should understand that all charting systems will typically take the closing value of the period. So you're looking at a daily chart, and it's a line chart. So if the question arises in your mind, is this the high of the day or the low of the day or the opening price of the day that is being plotted? No, the answer is, by default, the system, most programs will be written to ensure that the closing price of the day has been taken. Because a day is a long period of time, and you know the foreign exchange market trades all the way from Wellington to New York. Okay, from Monday to Friday, it basically never stops. Okay, so it's the closing price, which means it's the New York closing price. Okay, so the last major market is New York. Okay, so it will take the New York closing price, so around 5 p.m. New York time. Okay, so this is the price at 5 p.m. New York time. That's what's being plotted. Is this clear? So close is generally taken as the default value for line charts, the default figure. So, but you could technically also plot a line chart for the opening price, if the system gives you that flexibility. If the system is programmed in such a way to give you that flexibility, theoretically it's possible. Okay. All right. Okay, so we take care of this. The line chart is the most is the simplest chart. Now, as you can see here already, there are many different types of charts that are possible. Okay, you can already see here. If you go here, you're supposed to have a login on this particular charting application. You can go here and just look at the various types of charts that are possible. We don't have time to go through all these charts, but I'll just tell you the important ones in financial markets are basically the line chart. Okay, the bar chart. Now the bar chart can be of two types. Now these guys haven't given you the second option on the bar chart. Okay, if you look at Wanda, we'll look at. I'll just write it in the case of the bar chart. So the next example is the bar chart. Now do you notice here something here? Let's see if we take. Okay, well let's just plot this here and really zoom out and then try to see how much here. Can you see that there are two? Let's just focus on this. Okay, let's just focus on this period. Okay, can you see this? Yes, sir. 29 July. Okay, do you notice that there are two sort of ticks to the side? Okay, there's one over here. Okay, and then there's one here to the left. Yes. Okay, so this is a particular type of bar chart which is called, this is actually one step ahead. We should have ideally gone to that type of bar chart which is only which has only this tick to the right and not this. So just imagine that for a while. Okay, imagine that we have simply a bar chart which is just the bar, which is this, and then there's a tick to the right. Okay, imagine that. Okay, forget about this for a while. Then that's the next level of complication from the line chart. The line chart is very simple. You're capturing only the closing price. Then the next level is the bar chart, okay, which is called the high-low close bar chart. So technically bar charts are of, if you're looking at chart types, okay, bar charts, and bar charts will be of two types. Because the bar chart is quite important, so we'll just cover it a little bit. Bar charts, one type of bar chart is the, I'm just going to write HLC, okay. What does HLC stand for? High, low and close, okay. And so that is the first type of bar chart, the simpler type of bar chart. And then the other type of bar chart that is possible is, what will be the other type? Anybody has any idea? Opening and closing. Low, high, averages. No. So the other type of thing is, we just add the opening price to the HLC bar. So you see how we are going step by step, okay? In the case of the line chart, we just have the closing price typically, but always remember that this is just the default way of showing the line chart, okay? Line chart is only C, okay? But always remember, when we say only C, this is just the convention. Theoretically, there's nothing to stop you from plotting the opening price through a line chart, okay? But normally people don't do that. So we start with the simplest type of chart, with the line chart, which is only the closing price typically. Then we go a little bit, we capture a little bit more information per period. We start capturing the high-low close, okay? We call that the high-low close bar chart. So if you look at a system like Oanda, for instance, that Oanda FX trade system, which I was showing you earlier sometimes, okay, which has a black background. So that system gives you the option of, so it depends on the charting system involved. In this particular charting system, they haven't given you the option, okay? They have only given you the open, high, low, close bar option. They haven't given you a high, low, close bar option. If I see it here, yeah, they don't have that option here, okay? But it depends, it depends on the charting system that you're looking at, okay? So this is one of the ways you would judge charting systems. How good is the charting system? What are the various types of charts that it offers you, okay? Because when you go into industry, people will come and try to sell you charting software and other trading software, risk management software. So you should have the ability to evaluate the quality of the software, okay? So simply we start a simplest plot line chart. We start from there. We increase the capture of information. We increase the types of variables that we capture. Now we start capturing the high, low and the close per period. Then we plot that, and that's what looks like this. Forget about this little tick to the left now. Imagine it does not exist, okay? Now we just plot, this is your high, low, close bar chart. So you have a bar, this the length of the bar, and then you have the tick to the right, which is the closing price, okay? So in this bar, what we have is, let's make it even more, So in this bar, what we have, what is this? The low price or the high price? High price, okay? And this is the low price, okay? So as you can see, the length of the bars are not the same, okay? Because obviously the market activity is not the same. It's not like a static thing every day, okay? Some days the market doesn't move much, some days it moves a lot, okay? So you can see on this day it moved a lot relative to this day. So this gives you the height of the bar, basically gives you the sense of how much the market has moved during the day, okay? Because it gives you the distance between the high and the low, all right? Okay, so it plots the high price and the low price, and then to the right, this tick here, this plots the closing price, okay? So you can see here that the market is very strong. It opened and closed near the high, all right? So this is one of the things. So we are just plotting the types of charts at this point of time. So we have this second category of chart, which is the high-low close bar chart. Now we start looking at this also. We no longer imagine that it doesn't exist. We see that it does exist. Now you see, this is the open. This is the next level of bar chart. So you're continuously adding information. So now we add O. Open, high, low, close. This is clear? Okay. So this is the next type of bar chart, which is we see this bar for what it is. It's got a tick to the left and it's got a tick to the right. Okay. So this is the open. So this is the opening price. This is the low price, this is the high price, and this is the closing price. This is clear? So open, high, low, close. All right. So you can see here when you mouse over, you can see, because this is the open, high, low, close bar chart. Now notice something, that when I'm mousing over with the cursor, now the system is showing me four types of information for each bar. For each period, okay, it's showing me 4 types of information. When I was plotting the line chart, it was showing me only one piece of information, which was the closing price, okay, because that line chart only plots the closing price. Now that I've told the system to plot the OHLC bar chart, okay, now it's got 4 pieces of information for each period. Is this clear? Are you convinced? Everybody's clear? Yes, ma'am? Yeah. Give her the mic if we can. What are you talking about? Candlestick? No, we are coming to that. Yeah.
Is it similar to doji candlestick? What is the difference?
Yeah, doji is a pattern. Okay, doji is a candlestick pattern. So the candlestick is a type of chart. We are coming to that next. Okay. So, but you're right in the sense that the OHLC, the open, high, low, close bar chart, has the same information that, at least the input. Okay, not in terms of display, but in terms of input, the OHLC bar has the same information as the candle chart. The candle will also work with these 4 pieces of information. Okay, so we'll look at the so is everyone clear about this now? How we are going from one step to we are increasing the information being captured at each for each period. Yes, give her the mic if we can. Yeah, so we have gone here. Yes.
Sir, please graph.
1 minute, okay. I'll just. All right, okay. Graph, yeah.
Sir, my question is, why we call it a high, low, and closing price? Because it's rising. The chart is rising. That's why we are calling it high, low. What if it decreases the price? Then what will we call it?
No. Even if you even from here, if you look at these 3 charts, okay. If you look at these 3 bars, in this period, if you just look at this period, if this becomes your data range, then the value of the variable is decreasing over this data range, right? It started here and went down, right? If you just look at these 3 bars, all right. So the high low in any period, you have to understand in any period whether the price is actually going down or not. Okay, and going down means you have to have some reference, which means typically you're looking at the closing price as a reference. Going down, falling means it has to be falling relative to something, right? You can't just look at one variable, one plot and say it's falling, because there's no reference point, right? So are you following what I'm saying? I'm not able to get your question, but what you need to understand is that for any period that you track, for any period when the market trades, there's always going to be a high price and always going to be a low price and a closing price and an opening price. So are you saying that if the market is going down, we should not call it an open, high, low, close, we should call it an open, low, high, close? No, we don't do that normally. Okay, so that is not the convention. The chart type remains the same. Okay, so we say that if the period is going down, we say, I mean, if the variable actually is declining in value over the period concerned, we just say that the variable is declining, right? So we'll come to that reading, but we don't say that. That's not the convention. Okay, all right. Okay, so open, high, low, close. Is everyone clear now? Okay, we are tracking this information. The next type of chart is the candle. We are still working with the same kind of information. Okay. Okay, high, low, close, open, high, low, close, 2 types of bars. Candle charts use the same information, open, high, low, close, but you see that the plot is a little different. Okay, so let's look at a candle chart plot. Okay, so we will look at, I don't know the terminology that they've used. We actually normally want to have, yeah, I don't know why they've called it hollow candles. All right, so essentially this, okay, this is the way that candle charts are plotted. There'll be 2 colors typically used. Okay, the information is the same for each bar. You see that, let's look at the same bar that we looked at, 29 July. The information is the same. Okay, you still see that the cursor is showing you how many pieces of information? 4 pieces of information: open, high, low, and close. Okay, but here what happens is the candle chart gives you a little bit. That's why I was responding to Mehak by saying that candles include the same input as open, high, low, close bar charts, but the display is a little different. Okay, the information is the same, but the display is a little different. So you could say that the candle chart is a little bit richer in that it gives you a quick visual picture of what has happened in the market. Okay, so typically most candle charts, if you look at, once again, if you look at the Oanda platform, their charting system is actually quite good. Okay, so if you look at the Oanda platform, you will see that, in fact, I have one of their plots here. Yes. If we look at, now this is, let's look at this one, let's look at the monthly, let's try to pop it out. Okay, here also we might have an option to, okay, so we're not going to spend time doing that, but normally what happens is most of the charting applications will give you an option of coloring the candles differently. So they'll ask you, what in the case of an up candle, okay, what do you want as a color? You can have different colors, like the Oanda platform. If you look at, you have different options of colors. If you look at this chart also, if you look at this, if I just look at, okay, let's open a chart here. All right, here also you can see that the candles are colored differently. Can you see that?
Yes, sir.
Okay, so this is basically meant to give you a quick visual picture. Okay, and now you can see something here. Let's see what, yeah, where is the open? It's not showing the open price. Let's look at this. Let's see. So the idea is that you'll always get an option in the, and I'm pretty sure you can actually, because I don't normally use candle charts, so I just use bar charts, and here you can, I'm pretty sure you can change the colors if you don't like these colors. Okay, but the point is that you have different colors. Now, what is the importance of the different colors? Let's try to understand this. Okay, so look at this candle, which normally we would call a white candle. Okay, so in general we would say there will be 2 different types of candles. This kind of the light colored, we'll call it the white candle. Okay, and this we'll call it the dark candle. Okay, or the black candle or the dark candle. So here, for instance, the white candle will be the green one, and the dark candle will be the red one. Okay, so let's see why we do that. Okay, so let's look at something here. Okay, okay, what do you see here between the relationship, in terms of the relationship between the open, high, and the low and the close? Can you see a pattern here? Like if you compare this, what is the open here? 89.90, high is 91.22, low is 89.80, and the close is 91.20. Okay, okay, here, so here notice something. What is the opening price? 89.90. What is the closing price? All right, so we can wait. Why we don't need to wait for that too. And look at this particular one. Okay, what is the opening price? 91.79, let's say. Okay, and what is the closing price? 91.02. Okay, all right. Now let's look at some other cases. Okay, look at this one also. What is the opening price? 92.26. Opening price. Everyone can see. Maybe the people at the back can't see. The font is too small. You can see.
Yes, sir.
Okay. Ganotra, you can also see. Okay. 92.26. And then what is the closing price? 92.02. Okay. Now let's compare it to this one, because this one has a different color, this one has a different color. What is the opening price here?
91.29.
91.30, let's say. Okay. And what is the closing price?
92.26.
92.26. Okay. So based on all these things that I'm going through, once again look at this. Opening price is 91.20. Closing price is 91.79. Okay. All right, so based on what we have shown you so far in terms of the relationship and the colors of the candles, okay, that you have these situations. Look at this once again. 89.90 is the opening price and the closing price is 91.20. Okay, this is a white candle. Now here the opening, let's go back to this red candle, 24th July. Opening price is 89.63. Okay, and closing price is 89.23. This is a red candle. So based on this, are you able to detect a pattern?
Yes.
What is the pattern? Who wants to tell us what the pattern is? So what is the, I mean, so based on these little tests that we have done, okay, we have just done some random, anecdotal, we have just collected some anecdotal evidence and we are trying to detect a pattern. So based on the patterns that we have seen, if you want, we can see some more patterns here. This is a light candle. The opening price is 92.02 and the closing price is 92.20. Okay, right? This is a white candle. Okay, then so based on all this that we have seen, once again we can see an even tighter example of a red candle, which is opening price of 91.35 and the closing price of 91.28. Okay, so based on all these examples that we looked at and the respective colors that have been given to the candles, does anyone want to tell me what the coloring rule is? We will use the words white candle and dark candle. Yes, Tanya, give her the mic. What is your answer should be in the form of a coloring rule, which is an instruction to the system that if blah blah blah, then paint the candle dark. If blah blah blah, then paint the candle white. Okay, what is the coloring rule?
So if the opening is lower than the closing, then we will paint the candle white.
Okay.
And if the opening is higher than the closing, then we will paint the candle dark.
Yeah, perfect. Okay, so you can also mention it in terms of the closing price relation to the open price, but whatever she has said is correct. Okay, so this is how we paint the candles dark and light. So essentially this gives you partly coming to what Parul was saying about the trend of the market. Okay, so in this way, why the reason why again we've lost the internet connection, I don't know why, but in this sense again, see what is happening is that the input information into the candle chart is the same as the input into the open, high, low, close chart. Okay, but the candle does a better job in terms of a quick visual picture, okay, to tell you about whether the trend of the market is negative or positive, whether the closing price is lower or higher than the opening price. So normally if the closing price is higher than the opening price, that's a positive trend. Okay, and if the closing price is lower than the opening price, that means it's a slightly negative trend. So therefore it's shown as a dark candle. Okay, and so this positive trend is shown as a white candle. Is everyone clear about this?
Yes, sir.
Okay, so basically this is the coloring rules, and so you can have different colors. As you can see here, their coloring is different, and here IB's coloring is different. It's interesting, the data is still showing green, but we seem to have lost the connection. Okay, anyway, we'll continue with this. Okay, so is everyone clear now? So we have a different type of chart, the candle chart. Okay, the last type of chart we have to look at is, I think the only other type of chart we'll cover is, and you have to be aware that all these different other types of charts. Now this I'm not covering because this you would have been already familiar from your Excel and all that, the area chart. Your Excel plots and all your practice in Excel, you are already familiar with these area charts. You know what the area chart is? It's just plotting like this. Normally people don't use this in finance, okay? It's sometimes you'll see this displays in some of the charting applications, but normally people don't use this, okay? People either use line charts or bar charts or candle charts, okay, or point and figure. So these are main types of charts that are used, okay? So here, point and figure, I'm not going to go into a great deal of detail, but you should be aware that there is something called a point and figure chart, okay, which is quite often which is used by some people who are technical traders. Okay, so this is another type of chart that you should be aware of. Okay, this is a point and figure chart. It looks like this. Okay, you will get this even on the Oanda website. Essentially this is all knots and crosses. This is like as if you're playing knots and crosses. Okay, so you can see that when it goes up, it's being plotted like this in crosses, and when it is falling, it is being plotted in terms of knots, okay, or zeros, okay. So or circles essentially. So this is called, this type of chart you should be aware that is called a point and figure chart. Okay, I'm not going to spend too much time on it. If you are interested in this type, this chart is, the main purpose of this kind of a chart is that it does a very good job of showing you the broad trend. Because sometimes when you look at these bar charts and all, it can get a little bit confusing as to what exactly is the trend, okay. So when you look at bar charts, this actually is a candle chart. What have I done here now? I need to get this back. Yeah. Okay, so these are actually candle charts. I'm just going to bring this back. Yeah, okay, so let it be here. So sometimes when you look at, but this could also be a bar chart essentially, okay. I can actually make it a bar chart here, although the information is the same. Let me just go back to camera, I don't know what to do in the display. Okay, alright, so sometimes you don't get a very good picture of the trend from a bar chart or a line chart, okay. Because it captures too much information, there's a lot of noise. Sometimes you may not get a very good picture of the trend. So the main purpose of a point and figure chart is to give you a, because the point and figure chart doesn't plot all the time. See, all the other types of charts, okay, the important thing about the point and figure chart is that, so I'm going to call it, have I written point and figure? Okay. You should be aware of this type of chart. It's an interesting chart type. You can study it a little bit more if you want. And if you go back to the Oanda website, okay, if you go to the Oanda FX Trade website, you'll see that even on the website they have some options for doing point and figure charts. Okay, so you can experiment with that, and then you can do if you set up an account there. But from India, you will need a foreign phone number to set up an account. So they don't let you set up accounts from India, the FX game account in Oanda. But they have some very good examples of point and figure charts where you can play around with it. So the main point about the point and figure chart is basically that doesn't plot every move. Okay, we should write doesn't necessarily plot every move, only plots moves and reversals above defined thresholds. Okay, so you'll understand what this means when you play around with point and figure charts on the Oanda website. Okay, or even here you can actually this system doesn't seem to be very good because it hasn't given you an option, okay, of it doesn't do a very good job of giving you the option of defining the trend. The main point about the point and figure chart is that it gives you a picture of the broad trend because it doesn't plot every move. Okay, so there is a defined threshold. Okay, so it is basically typically like you would define 10 by 30 or 20 by 60. Okay, so if you are defining 10, say let's say this is a 20 by 60 chart. Okay, so only when the market rises by 20 pips, only then will it plot the next cross. Okay, if you look at the cross, and then there has to be a 60 pip reversal. Okay, there has to be a 60-point reversal in order to plot any of those zeros. So unless if there is only a 20-point decline, it will not plot the zeros, the reversals. So the main point is, you don't have to remember all this, but the main point to understand is two things about that there is such a charting system called a point and figure chart, and the main purpose of that charting system is to, that kind of chart is to show you a broad picture or give you a good idea about the broad underlying trend. And it cuts out a lot of the noise mainly because it doesn't plot every move. So essentially what you're saying is, don't show me all the movements up and down, okay, every period, because every other chart will plot every move, okay, even a tiny little move will be plotted, okay, because it just wants to be faithful to the plotting rule. Every period show me the open, high and the low and the close, even though there's a little difference between high and low, okay. So but these guys in point and figure, you will tell the system that I want a 20 by 60 or I 40 by 88 PNF. Point and figure is referred to as PNF. Okay, so here, so we can just write this here. It's normally referred to as a PNF chart. Okay. Okay. So, but it's better to say point and figure, but sometimes when people are saying PNF, you understand that they are referring to the point and figure chart. Okay, so the point about this is the reason that this gives you a very good understanding, a very good picture of the broad trend is because it doesn't plot every move. So you give the system certain parameters. So the system, a good charting system, like if you go to the Oanda website where they have point and figure charts, just go and Google for Oanda point and figure, you'll get the charting application. So you can see that they'll ask you for user input. So this 40 by 80, which I said 40 by 80 point and figure, this is input given by me. So the system will ask you for input. There you can put in 20 or 40 or 10 or whatever. And then it'll ask you for a second input. Okay, so that is your X by Y. So 20 by 40 by 80 PNF, which means there has to be a 40 point extra move for the next cross to go up. Okay, the next cross, if you want to go, only when you go up by 40 points, the next cross comes up. And there has to be an 80 point minimum fall for any of the zeros to be shown. So therefore the small moves will not be shown. Okay, so that's why the point and figure is a very good chart, but it's a useful chart. It's good to be aware of this. So I'll leave you guys to play around with this and understand the chart yourself. I'm not going to go into the details of it, okay, because we have to cover so many other things. But it's a useful chart. I think as a part of your own coverage, you should learn about how to use point and figure charts, because it gives you a picture about the broad trend. Okay, it gives you a big picture view. All right, so these are the main types of charts. As you can see, there are many other types of charts. Okay, Heikin-Ashi and Renko charts. These are also used in foreign exchange. In many other markets, in financial markets, people also use these other charts, Heikin-Ashi and Renko charts. Okay, so you can learn about these charts on your own. But as you can see, there are many types of charts. Okay, so and if you go to the Oanda application, you'll see that they also have many other types of charts. So, but these are the main charts. If you know these charts, you're more or less okay with financial markets. Line charts, bar charts, two types. Okay, candle charts, point and figure. Okay, and you should also be aware that Heikin-Ashi and Renko charts are also used. Okay, these are all Japanese. The candlestick charts also come from Japan. Okay, and these charts, Heikin-Ashi, Renko, these are all Japanese charts, because in Japan they used to have trading in rice futures many years ago. Okay, I mean literally, I don't know, maybe thousands of years ago they had trading in rice futures in Japan. Okay, so that's where, when these rice futures traders used to trade, they used to chart using these types of techniques. So that's where we have these techniques from. Okay, candlestick charts, Heikin-Ashi, Renko, etc. Okay, so there is actually a book called Japanese Candlestick Charting Techniques, and the expression that Mehak was using, which is doji. Doji is one type of pattern in candlesticks. Okay, there are various types of candlestick patterns. If you look on Oanda, you will see candlesticks patterns also. There's actually a AI type of application that tries to detect candlestick patterns. Okay, so that's a subject by itself. There's a book on candlestick charting techniques. Okay, so there are different types of patterns. So you can look at that, and that's one area. If you become a pure technician, there are some people who trade just using candlestick charts. Okay, they don't use, they're pure technicians, number one. So first of all, people who use technical analysis only, they're called pure technicians, okay, in the financial markets. And some of these people are, within that, they only use candlestick charts. Okay, so that's also a legitimate way to approach the market. Okay, so we've covered this now. We've covered plot type. Okay, the fourth type is this concept of granularity, which we have already touched upon. Okay, but we need to be aware of this word, granularity. Okay, so this is something that we have to understand. Okay, so we'll use what is meant by granularity. Comes from grain. Okay, so grain means very small. Okay, so granularity, so if we say that something is highly granular, okay, so if we say that somebody made a highly granular presentation of this particular phenomenon, which means he went into great detail. Okay, highly granular means going deep, I mean with a very high zoom. Okay, so highly granular, therefore showing a great deal of the minute details. All right, so the main point is, this is all about the granularity. So when I change from daily and I go to 15 minutes, okay, I am changing the granularity. Obviously these things cannot be, first I should change the plot type. Let me just change it to candles, okay? And then I go to, let's say I'm going from daily to 15 minutes, okay? So I'm changing the granularity. All this is all granularity, okay? So granularity is the variable, and then when I set it to 15 minutes, this variable takes a value of 15 minutes. So in terms of the system design, the system sees the granularity as a variable, and when the user chooses 15 minutes, the user is assigning 15 minutes as the value for the granularity for that variable, right? Okay, so every variable has to be given some specific value. So in this case, you have chosen 15 minutes as your granularity, okay? So the main thing to understand is that is 15 minutes, in some sense I have actually increased it. I have sort of decreased the snapshot frequency. I have increased the snapshot frequency, okay, because from day I've gone to 15 minutes, okay. So understand this, that the 15 minute, just whenever you look at the granularity basically gives you the snapshot frequency. Whatever the value of the granularity is, like you're taking a picture every 15 minutes, okay. So earlier you were taking a picture only every 1 day. Earlier you were taking a picture only 1 day, now you're taking a picture every 15 minutes. So that is what is meant by snapshot frequency. The granularity is equal to the snapshot frequency. But the point to understand is that the period, technically the period, 1 day period is higher than 15 minutes. Is that clear? Okay. But when we go from 1 day to, when we have gone from 15 minutes to 1 day, have I increased the granularity or decreased the?
Decrease.
I have decreased the granularity, kind of zoomed out, okay? So it's not so granular anymore. But I've actually increased the period, okay? So the period and the granularity are inversely related. Is this clear? Okay? So we try to write this here also, okay? Okay, so granularity is proportional to frequency of data capture, which is our snapshot frequency, okay, frequency of data capture. But we should also write this here, that so we should write that it is inversely proportional to period, okay. Okay. The main thing to understand is that when you are going from a 15 minute chart to a daily chart, you are increasing or decreasing the granularity. When I'm going from 15 to daily, I am increasing or decreasing? I'm decreasing the granularity, okay. So conversely, when I'm going from daily to 1 hour, I am increasing, the granularity is increasing, okay. Is that clear? These are just some terms that you have to be familiar with, and once again just revise these and understand it clearly, so that once you understand the concept, you no longer have, so the related terms are frequency of data capture or snapshot frequency, okay. It's the same as the granularity, okay. Now one thing to understand obviously is that you have to always be aware of the technology aspect, especially in financial markets, very intimately connected to technology. We need to have a good understanding of software design, okay. So all these aspects of software design. Now typically if you see, now when the software has been designed, okay, the software will typically be designed, you understand the record concept? Each of these is a record. 27 June, 9 o'clock. This is the hourly data chart. 27 June, 9 o'clock is a record. Then, I don't know, I'm not able to go from 9 to 10, but obviously after 9 is 10. So 27 June, 3rd of July 1900 is a record, 3rd of July 2100 is a record. Every hour's data is a record, and if you are plotting a bar chart, that means if you are plotting an open, high, low, close bar, means there are 4 pieces of information, okay. So in that particular record there will be a field, okay. You understand concept of, we covered it earlier in databases, right? that you have records and fields? What? You haven't been taught about databases? No? Okay, let me see where we have. We should cover this a little bit. We'll put it back into your calc file. It's not that complicated, it's very simple, okay? Now, what we can write is the timestamp, okay? First is the timestamp. If you are plotting this kind of database, okay, this is the timestamp, okay? This is the timestamp, 27 June 1900. This is the timestamp. This is clear? Okay. Then, obviously, you have the variable that is already declared. We have the variable as Euro Sterling FX, okay? Now we have open, high, low, close, okay? So then what we'll have is, we'll have 29 July, whatever, okay? So now we have all these pieces of information, okay? Now this, of course, we can call it whatever it is, okay? So these are all my, this is like my 29 July 9 o'clock, then 29 July 10 o'clock, 29 July 11 o'clock, 29 July 12 o'clock, so on and so forth. Are you following?
Yes.
Timestamp. Okay, so I'm looking at an hourly database, okay, which captures open, high, low, close data. All right. So these are all the figures that I have. What is the timestamp? Okay, and then we have, this is like 29 July 9 o'clock, 29 10 o'clock, 11 o'clock, 12 o'clock, 3rd. This is clear? Everyone is following? Okay. So here you have to write 29 July 10 o'clock, 29 July 11 o'clock. Okay. Then whatever the open, high, low, close figure is for that period that you are supposed to capture, whatever these figures are. For that 29 July 10 o'clock, for that 1 hour period, you should have monitored what was the open, what was the high, what was the low, what was the close. This is clear?
Yes.
Okay. So then you will put in some numbers there. Okay. So essentially here you have a database. Okay. And then you all call it a Euro Sterling. This is the label that you have, which is the Euro Sterling FX. Okay. If you write it like this, it is obviously Euro Sterling because it's Euro Sterling FX. Okay. So now, this is just the label for which this is essentially your database, okay? If you have only 8 hours of data, okay? So this is your database, okay? So these are all the records in the database. This 1 to 8, it has 8 records. You have not been taught all this stuff before. Okay, so you need to have a basic understanding of databases in finance because you have to be very comfortable with technology. Okay, you have to have a very good understanding of technology because you are going to be using, in any finance application, you'll be using a lot of software. You need to have some basic idea of how software is designed, what are databases, some basic concept. We are not expecting you to be a programmer. Okay, so this is a concept, this is a simple concept of a database, a crude example, a very simple example, right? Okay, so any other thing I can also write, okay, I can write Yash, then here I can write sex male, here I can write Khushbu, I can write sex female, I can write height here, I can write whether wears glasses or not, then what was the stream, does he come from BBA, does she come from BCom, that would also be a database, right? So this is a database, simple database, 8 hours of data. So these are the records, these things are the records, okay? So these are called records. These are your records. Each of these is a records. Each of these is a record, okay? So you have 8 records in this database. Is this clear? And these are actually called the fields. Field as in football field. Okay. Is this clear? So each record has how many fields? 5 fields. Because timestamp is also a field, no? You have to plot it accordingly, okay? And remember, because time series data, you're plotting a time series data chart, you can't just plot 1 and then plot 6. Because remember what we said in time series data, that the order of observations is relevant.
Yes.
So you can't plot hour 6 data after hour 1 data. Whereas in cross-sectional data, it doesn't matter. In cross-sectional data, it doesn't matter what is the order in which you plot. okay, as long as you have only one period, okay, and you have multiple variables. Are you following? This is clear. So this is an example, a simple example. So any other complex database will at least have these properties, okay. Now I don't know what are the developments in database software and all that, but this is the basics of a database, that you have records and fields, okay. So every record will have multiple fields, okay. So as I gave you another example of it, you can have the students as a database, okay. So okay, now what was I saying? Why did I get into the discussion of databases? Okay, yeah, the concept of the data range, and what was I talking about? What is the last one we were talking about? Granularity. Okay, so the point I was trying to emphasize is this point, okay, that since most software is programmed to display a fixed maximum number of records, okay, so because software will have a capacity, okay, to display only a maximum number of records. Now that's why I need to teach you the concept of records, okay. So this, now here in this database there are only 8 records, okay. Now so software is always programmed in such a way that it can only show you a maximum number of records, all right. So now if you change, where am I here? Okay, so now when I'm showing 15 minutes of data, okay, I have a certain amount of, I'm showing 1 hour of data each, okay, so it's a 1 hour data chart. My data range is from 24th April, let's say roughly, from 24th April to today. Obviously everything is today, these are all live charts, from 24th April to today, alright, this is my data range, okay, and my granularity is 1 hour. But the point is that suppose we don't know. Now suppose here there are say 100,000 records. Okay. Now this is my maximum zoom out view. Okay. This is my maximum zoom out view. So in that maximum zoom out view, there will be a maximum number of records that the system will display. Okay, that the charting system will display. So now suppose there are 100,000 records in this view. Okay. Now if you notice that this data range starts from 24th April. Now if I increase the granularity, okay, if I go to 1 minute, what will happen to my data range? Maybe I shouldn't have done it earlier, I should have clicked it. What will happen to my data range? I just went from, I told you that the system has a constraint that it can only show 100,000 records, okay, and when I was showing hourly data, it was showing me the data range was starting from 24th April. Now I have gone from hourly data to 1 minute data. Now what will happen to my data range? Will it shrink or it will increase? It will shrink. Because for same 1 hour of data, that's all, very simple. So you guys are very smart, you already understood this, but I just wanted to make sure, these are everything that is, what has happened to my data range now is starting from 5th August, okay, this is still the full display. So maybe this is very simple, you guys are very smart, I didn't need to show you this, but you need to have, I just thought we should discuss this so that you have a good understanding of, now you also learned about databases at least, okay. So you have to have a good understanding of software, how software is designed, okay, database software, because even when you do stock screeners later on, stock screeners are also working with databases, okay. So therefore it's good to have an understanding of how a database is basically structured, okay. So so now you can see all we are trying to say here is this very simple thing, which is that when you increase the granularity, you will automatically decrease the data range. Yes? Garvit, you're clear?
Yes, sir.
Okay, just think about it for a moment. Because your number of records are fixed. Maximum zoom out display, the number of records is fixed, which is the natural constraint of any software. Now it may be 1000 records in one software, in a better piece of software it may be 5 million records, but there will be some fixed number when the software is designed, and you can't keep changing that number, okay? So therefore whenever you increase the granularity, the data range is going to shrink, okay? That's all we are trying to show you, okay? Now we come to kind of once again to the question of what Parul was talking about, that we want to be so familiar with charts. Is this discussion too basic? What? Is it very obvious or too basic, or are you guys learning something? You feel like you're learning something? Okay, good. Because I have to make sure that all the basics, the fundamentals are very clear, so that later on you can start running and jumping on your own, you know, hop, step and jump, all that stuff you can do on your own. Okay, so now if we look at an example here, okay, as we said, one day if we look at a daily chart on euro sterling. So what I want to just show you clearly is, if I see a chart like this, what do I say? I just want you guys to be so used to it that you can just do it mechanically in your head, automatically, okay? That when this is happening, what is happening? The base asset is appreciating or depreciating? Is my question clear? When the chart is going up, everyone can see that, okay? I deliberately played with the data range to show you a clear case where the chart is going up, okay? Now, when the chart is going up, we can evolve a mechanical rule. Once you understand it conceptually, then you can just kind of memorize it, okay? But first you have to make sure you understand it conceptually. That when the chart is going up, the base asset is appreciating or depreciating? Appreciating with an A. Is this clear, everybody? Right? So when you're appreciating, you get an A, and when you're depreciating, you get a D. Okay. So now is this clear? So this is one mechanical rule that you should have in your head, that whenever you see, now then you should also be able to make certain other inferences. Okay. Now what if the base asset is appreciating? Okay. Now what is happening? Is the euro strengthening or getting weaker? Euro strengthening. Okay. How do you derive that? The rule that you have is when the logic for this rule is, if you ever forget it, that you see the scale on the right hand side. Okay. When the chart is going up, what is happening? That compared to the beginning of the chart, when the base asset was buying only 0.85 units of the terms asset, now the base asset is able to buy 0.92 units of the terms asset. So this is how you remember it logically, if you ever forget. Just look at any chart, you can always pull up a chart, okay? So now the base asset is commanding 0.92 units of the terms asset. So the base asset is much stronger now. So therefore, when the chart is going up, that means that the base asset is appreciating, okay? Now I asked you a further question. So all these things you should be, once you have understood the concept and done the practice for a few times, okay, then you should just be able to instantly form the conclusions, okay? So when this chart is going up, okay, because as a market professional, you don't have time to go through all these baby steps every day. You have to go through the baby steps when you're learning, understand the logic, internalize it. So as a market professional, your brain in an instant will see that it's appreciating, okay? So here the euro is getting stronger or weaker? Stronger. Okay, and what is the logic for that? The base asset is appreciating, you know, and the base asset in this case is the euro, so therefore the euro is getting stronger, okay? And once again, remember, also never forget the terms asset, okay, because you see when people in the market, I've asked you to watch business TV, when you see the experts talking on TV, they talk in very general terms and very loose terms, okay? You should not talk like that. So just the euro is appreciating is not a complete statement. You have to say the euro is appreciating against the sterling, okay? And even then it's not a complete statement. Why? Let's look at this. If I just say the euro is appreciating against the sterling, okay, let's look at now a different currency market, okay? Let's look at, this is not a good example because it's going continuously down. I think we try to pull up something else. Hopefully it doesn't take too long to load, okay? And we'll try to reload this. The point is that, so the point I'm trying to illustrate here is the next point that we are covering. Okay, so we already covered when a chart is rising, base asset is appreciating, terms asset is depreciating, vice versa. Okay, now when you are talking about a chart, okay, you have to specify all the 4 parameters, okay? This is what I mean by not talking loosely. When you say I have a chart, you have to say I have a chart of euro sterling FX. The data range is January to March 2017. Okay, you have specified the data range. It is a candlestick chart. Okay, and it is a period. The granularity is daily. Have we covered everything? We have covered granularity, we have covered the plot type, we have covered the market, we have covered the data range, okay? Only then is the statement complete, okay? And when you're talking about, the other part I wanted to, when you're talking about a market having gone up and down, okay? The reference chart. Now, very often you'll find that people say that a dollar is appreciating. Okay, now dollar is appreciating, first of all, is not a clear statement, because is it appreciating against the yen or against the Australian dollar or against the Kiwi dollar? Okay, so that you have to specify against what. Okay, and not only that, the data range is very important. Okay, the point I'm trying to illustrate here is that if you change the data range, the picture might change. Okay, so I hope this has loaded. Yeah, our euro chart has loaded. Okay, so what I can show you here is, now look at this. Okay, when you look at this chart, okay, now this is a bit interesting type of display. I'm going to go through this display and give you a picture of this display. You should understand how this display is constructed. Now, in an ideal setting, okay, you can set up this display for yourself, but you won't get Indian equities on it. But you should understand now our general principles that we are learning about finance and financial markets. We have to go a little bit beyond the Indian markets and your current situation. Okay, but understand how ideally charting should be done. Okay, because we are spending a lot of time learning about technicals, but it's a very useful set of techniques. Okay, so this is the ideal charting perspective from my point of view. Now, understand how this thing is. This is like a palette type of display. Okay, you know, like you have a color palette, you have a palette on which you have all these different colors and you start painting from it. Okay, so it's like a palette kind of display, and you see what is going on here. Okay, all of these, see, if I click here, it's euro, click here, it's euro. Notice what is happening here, and notice this. Okay, and these are all, this is my, what is it? Granularity. Okay, the 1 week and all that is the granularity. This is the market, and this is the plot type. Okay, so only thing that we have not talked about is data range. Okay, so essentially what you will see here, what I've done is, in this particular display, try to understand the display. Okay, first I started with monthly. So because we read from left to right, okay, since we are not reading Urdu, normally we read from left to right. Okay, so we are reading from left to right and then from top to bottom. Okay, all right, so we are going from here. I start here. Notice what my granularity is. I'm going to click on each of the boxes. Notice something, that the market is not changing. Okay, the market is not changing. What is my granularity here? Monthly. Okay, here weekly. Market never changes. Plot type never changes. Okay, it's weekly here. Then next, daily. Okay, 1 day. Next is 8 hours. Okay, then 4 hours, then 1 hour, then 15 minutes, and then this is 5 minutes. It's actually, on this system you can actually trade from the chart. Okay, this is like a chart trading facility, but I want to just get rid of this right now. Click something. I just want. Okay, cancel it. Okay, all right. Okay, let's go back to this. All right, so have you followed the scheme of the chart, how this is laid out? Yes. You understood the scheme of the chart? I have the same market, the same plot type. Then, just because we want to go from left to right and top to bottom the way we normally follow stuff. Okay, so here I started with the highest periodicity. Okay, so the lowest granularity, and as I go from left to right and top to bottom, the granularity keeps increasing. Are you following that? Okay, so as the granularity increases, what will happen to the data range? As the granularity keeps increasing, the data range will decrease on each chart. As you can see here, this chart starts in all the charts. These are all live charts. You can see the figure. The figure is the same. So the end of the data range is always the current period. Okay, so we don't have to worry about that. But in practice, when you're talking about the data range, you should also mention the current period. I mean the end date. To be very strict and to be methodical, you should mention the end date. But so what are we talking about here? Here the start of the data range is around 2002, June of 2002. Can you see that? It started in June of 2002. Now here it's already at maximum zoom out. What is the data range here? 2014. The moment I go from monthly to weekly, my data range the starting of my data range has shrunk from 2002 to 2014. So obviously the data range is shorter now. Okay. So essentially what this chart, so this is the paint point. Once again, you see the illustration of that principle. As the granularity increases, the data range will shrink. Okay. So you can see this in any piece of software. Okay. Now what is happening here, what I'm trying to do here is essentially this. Now I'm trying to show you this principle that when you're talking about charts, don't talk loosely. When people keep saying dollar is appreciating, this, that, it's not complete. First of all, the dollar against what? Okay, the dollar may be appreciating against the Canadian dollar, but depreciating against the euro. You don't know. So you have to make, when you make a statement, you have to make it as a general statement. I mean, you have to make it very specific. Okay, all right. So when you're talking about charts going up and down, and then you have to mention ideally all. Now, the other important thing is especially this. When you are talking about the importance of the data range, okay, what I'm trying to show you is that when you just say the dollar is strengthening against even if you say against the yen, the dollar is strengthening, okay, or the dollar has appreciated against the yen. If you make a statement like this, even this statement is not complete because you have not specified the data range. Look at this now. If I show you this chart, this is the euro. Now I look at this chart and I say the euro is depreciating. Is that statement correct? When I'm on this chart, I say that the euro is depreciating against the USD. Is that a statement? Is that statement correct with reference to this chart? Now don't look at anything else, just look at this chart. Is that statement correct? With respect to this chart, this is correct. Now this chart essentially differs from the other charts only in terms of the granularity and the data range. Okay, so mainly we are trying to emphasize here the importance of the data range. Whenever you are making a statement as to whether something is appreciating or depreciating, people often say that the euro is appreciating or the dollar is appreciating or the dollar has appreciated, but they don't mention the data range. They never mention the data range. I mean, it's almost guaranteed when you look at people talking on TV, they almost never mention the data range. Okay, but the statement doesn't have any, because now the same thing, the current period is the same all the time. It's always the current period. Okay, now the end of the data range is the same. Now if I look at this chart, I can say the euro is doing depreciating against the dollar. Now can I just focus you on only this chart, forget about all the other charts? Now can I just look at this chart and say that the euro is appreciating against the dollar? Yes. That statement is also true. Yes, Ganotra is not convinced. Are you convinced? Okay. So I look at only this chart. Now I say that the euro is appreciating against the dollar. So you see why that statement is a problem if you don't mention the data range. Because if you change, and here I'm not making stuff up to give you this example. It's real stuff. Okay. These are all real plots. Okay. So can you see why that if you don't mention the data range, then it's a problem? You have, I mean, your statement is not complete or it's not specific, okay? Because I don't know what data range are you referring to, okay? When you say the dollar has been appreciating against the yen, over what period? Okay, at least the data range should be mentioned, okay? Granularity and plot type are not so important in this kind of a context, but the data range is very important. Is this clear? Okay, that's all that we're talking about here, that the importance of the data range should not be lost sight of, okay? This is all that we're saying here. What I showed you just now is nothing but this. Okay, so obviously a picture speaks 1,000 words. So you can understand it that the charts, when you have different data ranges, you can have a different assessment of whether the base asset is appreciating or depreciating, which I just showed you in the case of the euro. Okay, all right. Okay, now the importance of charts, as I said here, okay, why even if you eventually decide that you're going to go in for you want to be a fundamental analyst, okay, and fundamental analysis is a more politically correct position, okay. So saying to the market that I practice technical analysis is still not politically correct, okay. So people like to pretend that we don't use technical, even when they actually use it, they try to say that we don't use technicals, we use fundamentals, okay, because fundamentals seems more logical. You see how technical analysis to some extent is a little bit problematic. It seems a little like voodoo, because I'm just telling you, just surf the waves, okay, and just take a view and look at the market price patterns and take a view. Do you understand why people might not want to say to the outside world that this is how we are trading? You understand what I'm getting at, okay? Although nobody says that about surfers, Nobody looks at a champion surfer and says, hey, he doesn't have a PhD in physics, take away his medal. Nobody says that, okay? But what you're doing is actually exactly the same as what a surfer is doing. A surfer has no clue about physics, but he's able to surf well, okay? So you can do the exact same thing as you would probably be finding out in your trading project, that at the end of the day, if you're able to call the waves, if you're able to call which way the market is going, okay, and make money, does it really matter whether you knew why it went up or why it went down? Does it matter?
No.
Doesn't matter, right? If you develop a flair for making money that way, it doesn't really matter in a hard-nosed business sense. But people are much more complicated than that. They want to appear to be rational. Okay, they want to appear to be rational, reasonable people who are trading based on reasons and analysis and all that. So that's why it's not politically correct to say that you're practicing technical analysis. People like to say, but it's a very useful technique, and it's the most important thing to me is that it offers a very objective way to limit your losses, which I think is basically the heart of everything in the markets. Whether you're using, if you have poor risk management, even as a fundamental trader, you will not survive. Okay, now let me show you one other way of doing this. Okay, yes, yeah.
Sir, as of now, what happens is that we look at the upward trend, then we look at related news for a particular stock, and then we try to predict whether it will go up or go down. So that is what. So how long does it actually take to understand fundamental analysis?
See, first of all, fundamental analysis is not a holy grail, in the sense that this is just because you understand fundamental analysis and you're good at applying it in a textbook fashion, okay, that doesn't mean that your view will be correct. So that's why I say that finance is not like engineering, okay. So in engineering, if I learn how to design a jet engine, okay, and I follow and I've learned it thoroughly, and I follow all the instructions and I follow all the principles, then my jet engine has to work. There is no uncertainty about it, okay. If I put in the right fuel and everything, my design specifications are correct, and then it has to work, and it will work every time, okay. So are you following what I'm saying? So this is the difference between science and hard science and engineering and finance and economics, okay. Although in finance there's a very bad practice that happens in academia and a lot of the courses and all that you look at, that there is an attempt to portray finance as something like, you have expression like financial engineering, okay. These are very dishonest efforts according to me, because they give students, because students don't know, right? So we are just giving students a false sense of security. The first thing you have to understand is finance is not engineering. So even if you know finance, and the first answer to your question is how long does it take to understand fundamental analysis? It could be years, because you keep getting better, okay? You keep getting better, but even the best fundamental analyst, he is hardly right maybe 50% of the time. I mean, if he's lucky 50-60% of the time, he should consider himself, I mean, if he's right, he should consider himself lucky. So that's the difference between engineering and finance and economics, okay? Finance and economics is the same. Financial market, asset prices, like what's going to happen to the euro sterling, who knows, okay? And there's really no way of knowing. So the reason I say all these financial engineering and these kinds of courses which are designed, I think they are very dishonest, and they do students a great disservice, because they give students the impression that finance is somehow like engineering. It's not, okay? Engineering is a totally different league, okay? As I said, you design a jet engine, okay, put in the right fuel, it has to work every time. If it's not working, means there's some problem in your design, or there's a faulty part. Obviously, if you have a part which doesn't have the right tensile strength, then the thing might not work. But that's not the fault of the physics or the science, okay? Is everyone understanding? Is everyone clear about that? Okay. Yeah, one second. Yeah. What happened? Garvit is getting restless.
Yes.
Garvit always gets restless toward the end of the class. That is an indication that, the class is about, time is almost over. Yes, what is the question?
The rise and fall in the price,
yeah,
is either due to the demand or supply forces or any other economic condition. There should be some way to evaluate this, to find out whether or not, so that we can increase the probability of our prediction.
Yeah. So no, essentially what you're getting at once again is you're getting at the you're still getting at the let me just briefly cover something here, okay, which I need to tell you. No, I understood what you're saying. What you're essentially saying is, understand what Chug is saying, okay? What he's trying to do is he's essentially making a case for fundamental analysis. He is essentially saying that there should be some reason why the market is moving up or down. Okay, so the first thing I would say, it's a very important question, okay, and it's a natural question. The other thing that I would tell you to remember it very clearly, like hammer it into your head with a big nail, okay, which is that although one of the things you'll notice in the market is people keep talking about why the market has gone up or down, okay, in practice it is not possible in a scientific sense to know why the market has gone up or down, okay. So you should operate at two levels. First is you should understand the market chatter, and you should understand what people are saying. Okay, the Chinese currency has gone through the 7 barrier, the trade wars are escalating, therefore the outlook for the global economy is gloomy, therefore the stock market is going down, okay. So you should understand that as well. You should be aware of that this is what people in the market are saying about why when they talk about why the market is falling, okay. Are you understanding? I think I'm answering your question to some extent, okay. So you should understand that. But at a more important fundamental level, you should be aware that this is all garbage, okay. That you should know that it is not possible to know why the market is going up or down. You should not fool yourself at that level. And this is something which nobody else will tell you. So it's important that I tell you this. You should understand. What I mean by knowing is if I go to a chemistry lab, I put water in a beaker and I start heating the beaker and the water starts boiling. I know that the water is only boiling because I am applying heat to the beaker. In that sense, it is not possible to know why the market is going up or down, and it will never be possible. Anybody who tells you otherwise is either an idiot or is dishonest. Okay, so understand this very clearly. Okay, if you learn one thing in finance, this is one important thing you should learn, that you operate at two levels. Understand what the market chatter is. You should not be unaware of that. You should know that the Chinese currency has broken 7. Okay, this is the big news in the international market. But you should also know that this is all garbage. That actually you can never really figure out why the market is moving the way it's doing. It's moving. It's irrational. The market is not rational. This is an essential reality. You are making a case for the rationality of markets. It's totally understandable. But my response to you is that that's not actually correct. So maybe as you practice more and more, you do your fundamental analysis more and more, and try to understand and watch how the market reacts. That's the purpose of all these projects, to make you do this fundamental analysis, follow the news flow, see how the market is reacting, and then ask yourself, do you think the market is really rational? Like one of my students at IMT Ghaziabad, after his project came and told me, so I have realized that the market doesn't make any sense. So I said, this is a very good understanding that you arrived at, because it's not sufficient for me to tell you. You have to understand it deep inside yourself. Okay, so that's what I mean by, okay, so now we will not hold Garvit back any longer. Okay, just one brief, I'll just take 2 minutes, okay. Some people have a problem with the market is dropping, so you guys have a problem, you're not able to trade, okay, because most of the stocks cannot be sold short because of the lack of shortable stock. But this is the challenge, okay, understand, one sec, guys. If you go into an asset management situation, in India you can't short sell stocks effectively. Legally you can, but effectively you can't, because there's no supply. Okay, so you are going to face this problem which every asset manager faces. You are effectively operating as a long only asset manager. Market is going up, but look at TCS. TCS is going down. Some other Infosys also was, I think, going up. So you have to go through those 50 stocks and find stocks that are going up even when the market is going down. This is what stock picking is. That being able to detect good stocks in a down market. Is this clear to everyone? This is your challenge. So now you're finding out through the project some of the real challenges that people in industry face. Okay, the same thing that is being faced by people in managing HDFC mutual fund. They have the same problem. The market is going down, but some stocks are, how do I buy the stocks? How do I find the stocks that are going to go up? Okay, clear? Alright, just like Garvit is looking for which period, where do I find a class where the class is about to end?